What's up guys, my name is Kevin Murray, and today in this video I'll be talking about how to do research on a new stock idea that you see that you got recommended from a friend, or maybe it's from social media or a company you saw on CNBC or any other platform. And really the first thing that I do is, it's cool that you watch your YouTube video on it or in CNBC and you get like a cool company that seems interesting, that you understand already a little bit, the basic business model, but you want to do your own research and not have any bias towards that specific company first. Something that I learned like early on as an investor. You got to think for yourself, and do you actually understand this company, and do their valuations and metrics matter, which I talked about later in the video briefly. And really just the first thing I do is go and type in, I'll be using the example of Corsair Gaming. I do Corsair Gaming, and then after that IR, investor relations. And every publicly traded company you could do this for. If it's Tesla IR, Facebook IR, Meta IR, or Microsoft IR. And usually the first link or first website is their investor relations page. And every publicly traded company does that. And the first thing I try to find is their investor presentation. So I go here in events and presentations, and I'll try to find something related to it. So we have their last earnings presentation, and also I want to look at their 2022 Investor Day presentation too. And briefly, like investor presentations, their essential goal is to sell their company to you quickly. They give you these bright images, these cool statistics, how the company's doing so well, their basic business model, and all that kind of stuff. And you could, from doing like 25 or 30 minutes of research, going over their investor presentation slide by slide, you have a brief understanding like what this company actually does. This is the outline for the presentation for Corsair, and it talks about like they're into hardware, software, services. And these are all the products they have in their lineup, from everything that a gamer, content creator wants, a streamer, or even like a casual gamer. They have every necessity for that gamer, essentially what I'm seeing from here. They have all the computer parts that goes into a PC. They got accessories, the monitor, the stream deck, keyboards, chairs, and global footprint. They're an international company. It seems the revenue is growing solidly, and there was a big jump from 2019 to 2020 from the pandemic. And it breaks down their revenue segments too. 66% came from gaming components, from computer parts essentially, I think, and then gamer and creative peripherals from the Elgato brand. The three main drivers for Corsair's growth is getting into new categories, gaining market share from their pre-existing technologies, the markets we're going after. And this gives you like various statistics on the industry they're going after too. Like, and it seems from the presentation like they only have dropped a dime into their potential target market. There's 24 million PC gaming enthusiasts, 125 million PC gamers, 1.4 billion gamers out there, 1.4 billion. And we could see like there's a huge market they're going after, and like it's very untapped, you could say, from the investor presentation. And it shows consistent growth. And there's an outlier from the pandemic here. Number of hours gamers spend. It just gives you more understanding of the gaming and streaming industry right now. Globally, how gaming is. Steady TAM over the years. And the GP shortage they talk about briefly, and the product strategy. Gaming memory. So they're a market leader in a lot of categories, from their memory, their SSD, that they're known for the DDR5, gaming components, and all that stuff. And they have a really brand name in the gaming streaming gear. Essentially everything about this specific company, like their streaming segment, their gaming setup, how they grew, their technologies from over the years, equipment or gear they've been releasing every single year, kind of shows like they're a company that wants to keep growing. They're not want to be stagnant, and they're just trying to be the one-stop shop for gamers and streamers in general. And like talks about the gaming industry again, the Elgato brand, like how many softwares and companies are implemented into this stream deck, which is cool. Anything else? Timeline, growth in new categories. They released the webcam, the new next generation SCUF controllers, the Origin segments and new microphones and all that stuff, pre-built things. And these are the new things they released in, I think, 2021. Yep. And they really just want to go after service revenue too, is their main drivers. And this is how, and if you look at Corsair, what they're trying to differentiate themselves from their competitors, like they're going after everything, like social media, esports, influencers, live streamers, product reviews, digital advertising, fans. They have a huge social media following And social media is one of the big drivers of advertising, all that kind of stuff. And this is their blueprint. They want to have $3.5 billion of revenue by 2026. It seems like, I think it's 12 or 13% growth year over year if you do that on average. That's pretty much it. And this gives you a good, I went kind of fast on this, but it just gives you a good glimpse of like, what does Corsair do? What kind of products or services do they have? What's their revenue look? What's their management look like? What kind of TAM are they going after? So it gives you a lot about it in just a short amount of time, but that's just very surface level research. And this is their last quarter highlights. Their new DDR5 that's coming out. It's very game changing for the PC market and gaming and streaming in general. New products they released, their financials, and you could see quarter or year over year comparisons. They're going. This was during COVID comps, so see, maybe it's a flatline year for them, and like COVID was like a one-time thing we think and know of, but we'll see what happens with that. And the numbers don't really look good year over year and just quarter over quarter, and management has already talked about that from my research. I invest in this company already, disclosing that. And it gives you just the highlights of per quarter and all. And in general, like what I do is like I like to check on the companies that I own in the market every single month or every 4 quarters, and just gives you the latest financial stuff on it. And like going back to investor relations, like it's very public when the companies want to go into their earnings reports, and it's every 4 months, and they try to tell investors a month or so in advance, like this is when we're going to have our earnings call, and it gives you the updated financials, the company's direction, how the management team is doing, and it shows in the stock price during the earnings reports. It's a little bit very boring analytical, but this is my process. Like go to the investor presentations page, go through their investor presentations like briefly, going slide by slide if I understand it. And after that, after looking at how their basic business model, their TAM they're going after, their management team a little bit, then I go into Yahoo Finance, and you just go in Yahoo Finance in any web browser, and I just type in the ticker symbol Corsair, CRSR, or Corsair, you type in the company. Their basic summaries, like what I look for is like their PE. So they're a profitable company. They traded 27 PE. Their earnings is in the first week of August. EPS is 0.48 per share. And they're pretty much at 52-week lows right now, and which is pretty much all the market is. It seems from an analysis that are into the stock, they say it's undervalued. Okay, the revenue has been consistently growing, but that 1 year is just like has accelerated their growth. A lot of analysts have an average price tag of $21. Quarter over quarter might not seem, usually their fourth quarter is the best because of the holiday season. First quarter usually is the slowest for them, and very inconsistent because of the COVID comps they're going after that they're being compared to. Statistics, they're trading at a 16.4 PE. And Andy Paul has said like their revenue growth, their plan is having a 12 to 30% year-over-year growth on average after this year, based on the market. And a 16.4 P for this industry seems kind of cheap if you look at maybe Logitech or their closest competitor, which trades around 25 or 30. Their basic margin, they're supposed to lose money 9.8%, but they're supposed to go next year 15% because of many factors like the recession, graphic cards. This is going to be like, it's going to be a very, very basic, raw understanding of what my process is. And one thing I also forgot is like, after going through like maybe the investor presentation, going through the Yahoo Finance metrics, like if you want to keep doing this consistently, one of the most important things you gotta do is go to the SEC filings, go to the annual filings. You want to try to find the 10K of this year. 10K essentially tells you everything about the specific company, and it's a lot to take in. And they break it down into like their basic business model here, everything about the company, the risk factors, their financials over the years, and it gives you the template. Like what I look for in a company, IA28, like business, risk factors, look at their financial numbers, their income statement, cash flows, and all that kind of stuff, and just give me a ballpark. Is the company growing year over year? How much revenue are they growing? Is it 10, 15%? Is it consistent growth? What products or new services are they offering to the market? Are they stagflating? Is this company or industry a growing industry? These are some of the questions I ask myself. And pretty much, I know it's kind of a lot, which is a little bit confusing that I did, but I look at their investor presentation. I look at the Yahoo Finance basic metrics, if this company's overvalued or undervalued in terms of their industry. I look at the 10K, look at their basic quarterly reports. And you want to listen to their conference calls too, which is publicly too. Do you like resonate with their management team? What are the questions these analysts are offering? And after that is like, I just make myself a document. Like, I'm a current investor, like what I said. Coursera's basic business model, how those segments like are divided. I screenshotted some of their investor presentations, the companies they own, the TAM they're going after, the growth of gaming since like the 70s, the TAM they're going after. Like, am I bullish on the gaming and streaming? And I said yes. Basic metrics of the Twitch growth, YouTube gaming. Like, gaming in general has been at all-time highs in terms of views. A good social media following. Some of the global market size. The risk factors I see in this company. Like, remember, this is a hardware company, and they're going to have low margins. If you want to increase their margin, you're going to have some type of service revenue or some type of software, which they are going after. Financial projections I have, which I do on my own. The TAM, the revenue growth over the years. Stream Decks, their path to revenue to $3.5 billion. Management team, competition, social media, reviews, my bullish thesis, and this is my bullish thesis. Like, they want to be the one-stop shop for gamers, streamers, content creators, and they own all these brands that are going to help people in that specific industry. Building this kind of like huge ecosystem. And like the drivers for like 2022 growth, like the DDR5, GPU market, we've seen graphic cards steadily decreasing. Now people were waiting to build their PCs because they didn't want to pay over 2x of the MSRP of graphics cards, and people want to build now PCs. They launched over 141 new products, and right now in the short term they're getting hit with COVID comps and all that kind of stuff. And you can read this on my own time, but I just want to do like a quick summary of like how I view it. These are the negatives right here. The plan to have $3.6 billion. There were drivers for 2022. The industry growth, the companies they own. Ticker terminal, it's TIKR. And I use that to like just copy and paste like the revenue drivers. Like, they're growing this year over year and all that kind of stuff. Gives me the basic financial metrics and all that kind of stuff briefly. Competition I wrote, 10Q, like notes I put, and just my simple projections. I mean, these projections might be, and then like overall just going to like my projections, like I see them growing 11%, 5%, maybe 13%, 13%, 12% every single year. And these are from my research. 11% this year, or 5% this year, next year, 13% in 2023, 13% in 2024, 2025, 12%. And I see their margins steadily increasing. I get that. P ratio that I think they're going to be valued at the end of 2025 from their growth factors. And I believe this stock could be potentially, at a low case, $80.31. But we never know, and that's going to be a 512 upside. But just going over briefly like my how I research stocks, like investor presentation, 10Ks, 10Qs, conference calls, go to the Yahoo Finance things, reading the 10K, doing my own research, and then just running my own projections. And here's like another case for like my projections for like Coursera again. Like, I think their net margins are going to increase like year over year steadily because they want to get into more software and more subscription types of businesses. And I see the revenues growing 11% this year, 5% next year. In 2021, they grew 11%, 2022, 5%, 2023, 13%, 2024, 13%, in 2025, 12%, which Andy Paul has said, like, the revenues after 2020, in 2023 are going to average 12 to 13% top line revenue. And I see their margins increasing with that because of how they're going to transition their type of business. And I did that calculation here and that income right here. And you could say that maybe Coursera trades at a 12, 15, 18 PE ratio by the end of 2025 because of the growth in the gaming and streaming and where the company is growing. And you get the market cap here and the average stock price. And the low case, it seems like it's going to be 189% upside from the current stock price, but it's gonna be always trade at a low multiple. They're not gonna go for that revenue growth, that 20 or 25 type of growth. They're going for more bottom line cash flows and just growing their revenues consistently and seeing what happens to the industry. Like, a new game comes out, of course they massively benefit from it, from like the next Fortnite or the next game. But we'll see what happens. But these are like my part 2 of like my projections. But thank you for watching and peace out.